All right, let's take a look at some altcoins. First up is DYDX. I actually posted this trade earlier today on Twitter. I did take this trade. If you don't follow me on Twitter, it's at 0xstacker. We'll go right ahead over here, twitter.com/at 0xstacker. So I did post this trade. It is up currently, 7%, which is not bad. I think I actually got in at like 250. 7 maybe, so not quite 258, but regardless, it is up. I use 10x leverage, so up 60+% probably. Coming down here, we're targeting the bottom of the range here for DYDX. We had some resistance here structurally. We're gonna use the Sistine Research indicators here, the long and short margin pressure levels, to actually identify that resistance, but it's pretty clear structurally that we were running up into resistance. If we go off of our last local high, you can see that we failed to close above and maintain price above $2.48. Now, we could stab up again, but I feel like this is a fairly decently high percentage trade, just shorting the resistance. I also expect a little bit of a washout going into FOMC. So I'd be happy if this just came back down to $1.86. I know we're kind of targeting here the bottom of the range. And that could potentially be our target if we end up needing to flip bearish and let's say the S&P 500 starts falling below its key levels and falling back into a bearish structure. But even this trade right here is about 3-to-1 risk reward. So I think that would be a pretty solid trade still to get into if it does pop back up and come and try to retest $2.48 or even above at this point. So short on DYDX, looking at a couple of different levels here for DYDX: 2.48, 1.865, and then below that 1.65. And this ends up being the top here, the local top. Then, of course, we would have 179, which is kind of confluent with 186. Not super confluent, but it's still in that general zone. And then $1.34 looks pretty interesting. So these are all levels that we could potentially take profits at if we start to see the market turn down. Now, DYDX just kind of pumped really, really hard. And I just would not be surprised to see a little bit of a pullback. I am expecting continuation to the upside with most of the market. But I do expect kind of a pullback here in the short term as we've continually printed that bearish divergence in a lot of the majors. All right, so that's DYDX. Let's take a look at Litecoin. We haven't peaked at Litecoin in a while. It has been steadily moving upwards, it seems. This is the first time I've looked at the Litecoin chart in quite a while. So let's throw on our long levels from this nice last swing low. $61 was where we came down to find support. We moved, had a little bit of resistance at the 5x long, a little bit of chop around the 4x long before coming back down to make support after we had held resistance up at 91.56. So 91.56 is going to be a key level for us. And I do post these levels over in the Sistine Research Discord. So if you missed the levels from the other night, Saturday night, we covered all of these coins up here, and these are the levels that I posted over in the Discord, and most of them, if not all of them, should still be valid. $122.08 would be our kind of our stretch target for Litecoin here. Let's move this up a little bit so we can see 122.8. You can see that was a key support level multiple times where we kind of deviated above and then fell back down below. If we move this back down a notch to our previous local low, that's where you see we're running into some resistance right now. And this is more of a resistance zone than a particular level. So I actually don't hate a short here either. I know we've kind of been pushing through some of these levels, but I don't hate a short here at 95 and change. I know we had support at 91.56, but 95.20, especially moving into FOMC on Wednesday. I feel like the market is getting a little bit skittish. We are printing, if I kind of draw this out really roughly, printing bearish ascending wedges on a lot of charts. And if we check the RSI here, yeah, more bearish divergence even on the daily here. So don't be surprised if this comes down to 71.40. I know that seems like a large correction, but it's really not. It's really not. We saw a 28% correction before more upside, and I think we could get another 28% correction, no problem. So those are the levels for Litecoin. I think a short here is fine. I definitely wouldn't be longing up into this resistance going into FOMC. All right, let's go to FraxShare, FXS. This coin has been really following the margin pressure levels and regrettably, very regrettably, had an amazing trade setup and entry point here that I completely missed and would have been a phenomenal entry. So we blasted through our 2x long margin pressure level here and have found support on top of it at 820. Now that is going to be a key level if we start to see a correction coming back down to test the top of the range, right? After we already held it as support once on the shorter term time frame, right? But after we've finally run into a little bit of resistance here, coming back down to retest it, I don't think is out of the question at all. Also, you see how extended this is without giving us a macro support level, right? This really needs to start correcting so that we can put in another low, right? And those longs have tested support. They've gotten the gut check and found that, hey, people actually do want to buy this, and that gives them confidence to push it up higher, right? So FraxShare to maybe $8.20. I think that would be a fine level to long at. If it breaks through that, $6.15 is another key level. I'd be a little bit more shocked if we came down to $6.15 for FraxShare, but note that this has periods where it moves up and down quite not violently, but this was a pretty broad range, and it was tapping both sides of this range for quite a while. So it can certainly make these 50% corrections. Right, so it's not out of the cards, in my opinion. Okay, that should be fairly straightforward. I'm not going to get too crazy with these levels. We'll maybe throw on the easy bands. Yeah, we're going up into resistance here. It is difficult for this to continue without some sort of a correction back downwards. Maybe tap the top of the range. Okay, that's FraxShare. Atom. Let's go to Atom. That's going to be up here in the A tier cryptocurrencies. Big fan of Atom. I know there's some inflation though, some staking emissions. So you really got to, if you're going to be invested in Cosmos, in my opinion, you really got to be staking. You really got to be staking to make sure you're offsetting those levels. All right, 1687. That is a very, very clear resistance level. So I'm going to go ahead and put that in because it's 16.87. It's so obvious, it's both structural and our 2x long level. But what does worry me a little bit here, and I do want to be clear, these bearish ascending wedges, they can move to the upside. It's just in general, they break downwards. When they do rip upwards, they usually rip upwards really, really hard. So we're going to play the percentages here, or I think it's smart to play the percentages here and just note that most of the time this is going to rip, or not rip, but most of the time this is going to resolve to the downside. So I could certainly see it coming back down to this $10 to $11 range, right? Where we've previously held support multiple times, previously held resistance multiple times, but on our trip upwards, we kind of just skipped through it and we have not come back down to test support in this zone. So that is going to be 1055. I'm going to put the zone in 1055 to 11.25, right? And we just see how much demand has come in here in the past, right? As well as some resistance. So we're going to remove that. Again, we have, again, with the bearish divergence, just everything printing this bearish divergence. I really don't like that in terms of, I just think it's so dangerous to be getting long here, getting FOMO. After FOMC on Wednesday, maybe maybe the market corrects a little bit going into Wednesday, and then this candle's Tuesday technically. Maybe it's not that bad. Maybe it's just a little bit of a correction. Then maybe we put in the bullish divergence, and that allows us to push up higher. But I do think it's a little bit risky to just be jumping in right now while there's so many bearish signals. Arweave, big fan of Arweave's fundamentals. Full disclosure, don't own any at the moment, but would be happy to average into a position somewhere down here in the green easy band levels. In fact, I did buy some at around $7 or a little under $7, I think. Ended up selling it over here to move, at a very slight profit in order to move that investment into something else, which, did fine. Again, with the bearish divergence, this is, not ideal if you're long, and not an ideal place to buy into. Now we are not that far away from our 2x long margin pressure level, which does come in at 12.14, 12.14, 9.11, $9.11. Be our support level on our way back down. This would be an interesting level to tap right here. That'd be an interesting level. That is a demand zone. So $7 to $8 is going to be, in my opinion, I'm going to put strong support. Put strong demand. And I actually think that would be a really solid bet to place from a longer term perspective, right? This has just been a very clear demand zone in the past. It's not too far above our green easy band levels. Like if you're just itching for an Arweave position, I think there's been plenty of worse places to buy Arweave than if it dips down to this $7 to $8 region again. Normally, for me personally, I'll probably wait for another opportunity to potentially buy it in the green easy bands. But I think that's a strong structural demand zone, and may not have the opportunity to buy it in that $7 to $8 range for too many more times, if at all. All right, last coin of the evening, we're gonna run right into Dogecoin, which had a pump today. If I can actually find it, this is going to be in the high inflation bucket. There we go. All right, let's remove these drawings. A little bit, actually, it wasn't that big of a pump today. It had a little bit of a spike, we'll call it that. Let's move this back to the range high. So we see that it's making some support on its 21-week simple moving average. Let's remove the easy bands. 9.8 cents is going to be a resistance level right there. That doesn't really line up with too much structurally, though, if I'm being quite honest. So I don't know how much I love that level. We're going to move this over to our swing high. All right, let me just check RSI. A little bit of bearish divergence. All right, we'll get rid of that. Better, though, is this 10.6 level. That I actually like because we've tapped into it twice. So over here and right there. So 0.116, 595, so 106. I do like that level for a potential short, especially if there's some sort of confluent, levels that are potentially coming in as additional resistance. We'll throw that there. That's not too far off. That's 11 cents. That's really as well in line. So 10.6 to basically 0.11. I like that resistance zone a lot for a potential short. And then, of course, if we just break through it and make support on top of it, we're probably going higher. But I personally think Dogecoin's is fairly overvalued. And if Elon continues to ignore it to focus on Twitter, it could move down again 10.4 even. So this is a whole zone of this is a big zone of resistance here. So yeah, call it like it's gonna be tough to get through on the first try, but we'll see. You can see we already failed to get through it over here one time. So will be interesting nonetheless. You always got to be careful shorting Dogecoin because you're just one tweet away from being liquidated by Elon. There we go. That's a little bit closer. So maybe 9.8. Okay, guys, that's going to wrap it up for the evening. I want to draw to your attention that I did put eight Research Hub, 8 step-by-step guides for airdrops. In the Research Hub, Go check it out at Sistine.ai. We have the research reports, which we've got the blockchain gaming one coming out next. Plays, these are one-pagers of analysis pointing you in the right direction towards opportunities in the market. Principles, these are educational concepts and frameworks that'll help ultimately guide you, hopefully, towards making better decisions and getting better results in your crypto journey. And then these airdrop guides and the tools and dashboards, we just have one dashboard right there. That's just a custom-made dashboard for people that are tracking, Dust in the D Labs and Yuga ecosystem. The airdrop guides, these are step-by-step guides. There's 8 of them now. These are the major ones that I'm watching. I'm going to be continuing to add these as they pop up. I firmly believe there's no way to know for sure. I firmly believe, though, that the cost of a Sistine Research membership will very, very likely be covered several times over, just if you dedicate 2 to 3 hours to covering and doing these airdrop guides. So again, there's no way to be certain, but I would be shocked. I think there's going to be those will basically be free money come next bull market when they actually do airdrop them. Guys, check out the link in the description below. If you're looking to trade on leverage, there's a link for Bybit down there. If you're potentially looking to trade any of these levels, I don't suggest anyone copy trade me. Note that these are just strong support and resistance levels. How you actually use them is totally up to you. If you want access to the indicators used in this video, the long, short margin pressure levels, the easy bands, and 2 other indicators that we didn't throw on the charts this evening, go over to Sistine.ai, link in the description below. Sign up for the Research Hub. You get all of this research and you get access to the TradingView indicators used in this video. Thanks so much for tuning in. We'll catch you next time. Peace.